Welcome to Accounting Cave. Subscribe, like, share the content, and press the notification bell so that every time I upload a new video, you get to be notified. Welcome back to this channel. On the previous video, we talked about Introduction to Management Accounting. In this video, we dive deeper in management accounting. Particularly in this video, as you've seen from the screen, we'll be talking about cost classification, that is, the costs involved in management accounting and how they are classified, or rather, the basis in which they are classified. Let's kickstart with some definition of terms in this video. One, costs. What is cost? It's the amount of expenditure incurred on or attributable to a specific thing or activity. To give a cost in equation, we'll say costs will be equal to quantity used multiplied by price. Another term will be cost unit. Cost unit is a unit of quantity that is used to measure the output of a product, which can be measured either in kilograms, ton, or per piece. Another term is unit cost. Unit cost is the cost of producing a unit of a product, or rather, we may say it's the cost of monetary value of a cost unit. Remember, in our last term, which was cost unit, we said cost unit is the unit of quantity that is used to measure the output of a product. That was not in any monetary value. Now, in unit cost, it's the monetary value of that cost unit. Some of the people say that unit cost is similar to cost of goods sold because we consider all the costs involved in producing and storing and selling the product. Now, also in unit cost, we consider the costs involved, either fixed or variable costs involved in producing the unit of a product. The next term is cost center. Cost center is any particular part of an organization that incurs its own cost, and the cost can directly be attributed to its existence. These examples will be department, division, or process because they incur their own costs and they can directly be attributed to their existence. The last term will be profit center. Profit center is any part of the organization that incurs costs and also generates revenue in the organization. This may be a department or a division. Profit center is very different from cost center. Cost center, it's only the cost which is incurred. But in profit center, it's the cost which is incurred and also the revenue generated. A good example of a profit center is the sale department in an organization. The sale department will incur costs while advertising a product, but it will also generate revenue from the sale of the product. Now, let's see how the costs are classified. Classification of costs is the process of grouping costs according to their common characteristics. This is done in order to accurately record, monitor, and control the costs. Number one, costs are classified on the basis of their functions. Let's see the first cost, which is classified according to their function, which is manufacturing, stroke production, or factory costs. These are costs which are involved in the manufacturing or the production of the products. These may include the material costs, the labor costs, and the factory costs, such as depreciation and the rent. The next type of costs in the class of functions is the administrative cost. As the name suggests, it's cost from the administration. This is the expenditure incurred in formulating policies, directing organization, and controlling the operations. These costs may include the audit fee and office, rent. The last type of cost is the selling cost. These are costs of seeking to create and stimulate demand to serve orders. These may include the advertising costs, salaries to the salesmen. The second class of costs is classified according to behavior or variability. We have two types of costs in this class, second class, which are fixed costs and variable costs. Fixed costs are costs which do not vary with activities or outputs. For example, we have rent, which do not vary either we're making profit or losses in the organization. Also, we have management salaries and also the insurance of buildings. The next cost is variable costs. Variable costs are costs which vary in direct proportion to the volume of output. For example, we have material and labor costs, which vary according to how many products or how many final products you want to produce. The third class of costs is the product and period costs. Product costs, these are costs which are necessary for production and cannot be incurred in case there is no production. For example, we have the direct material costs and direct labor costs. These are costs which are only incurred if there is production and they are necessary for production. The next type of cost is period cost. These are costs which are not necessary for production and they are written as expenses in the periods in which they are incurred. For example, we have rent, we have salary of company executives, and we have travel expenses. They are incurred for a period of time and are charged to the income statement. The fourth class of costs is classified according to identifiability with the product. In this class, we have two types of costs. We have the direct costs and indirect costs. Direct costs are costs which are incurred and may be conveniently identified with a particular cost unit. For example, we have the direct material cost and direct labor cost. These are costs which we can conveniently identify which product they've been incurred while producing. The next cost is indirect cost. Indirect costs are costs which cannot be conveniently identified with a particular cost unit. For example, we have the administrative expenses. In administrative expenses, we have like audit fee. Audit fee is a fee is cost which has been incurred, but we cannot have a physical product or a certain product which we can say audit fee is a cost which has been incurred while producing this particular cost, but it's a cost which is indirect. Class of costs is classified according to controllability. In this class, we have two types of costs also. There is the controllable cost and the uncontrollable costs. Controllable costs, just as the name suggests, they are costs which can be controlled to a certain level. These are costs that may be directly regulated by a given level managerial influence. For example, we have the variable costs. In variable costs, we have, for example, the labor costs. We can control the cost which we will incur for labor of a production of a certain product. We also have uncontrollable costs. These are costs which cannot be influenced by the action of a specified member of the enterprise or the organization. For example, we have fixed costs. In fixed costs, we have like rent of buildings. Rent will remain constant either if we've produced goods or products or we've not produced. That will remain fixed for the period that will be producing. The sixth class of costs is the special costs. In this class, we have relevant costs. Relevant costs are costs which changes from decision to the next, and as such, relevant costs will be affected by decision being made under different alternatives. The next type of cost in this class is the irrelevant or sunk costs, which are costs which have been already been incurred in the past and cannot be changed, and they are also relevant in decision making. The next type of costs of special cost is marginal stroke variable costs. This is the cost of producing an extra unit of a commodity. The next one is the opportunity cost. It's the sacrifice involved in accepting the alternative consideration, or rather, like in economics, we say opportunity cost is the cost of the foregone alternative. The last type of cost in special cost, we have the replacement cost. This is the cost incurred in replacing an existing cost or the market value of replacing an existing asset. The last class of cost is classified according to time. In this class, we have two costs. We have the historical cost and predetermined costs. Historical costs are costs which are ascertained after they have been incurred. The actual costs which are only available after completion of the manufacturing process. Number two, we have the predetermined costs. Predetermined costs, they are future costs which are ascertained in advance of production on the basis of all specified factors affecting costs. Thank you for watching and remember to subscribe and let's meet in the next video.